Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Hey, welcome to The Explainer. California's tax rules are getting a big update for 2025, and we're about to break down all the key changes from the Franchise Tax Board that you absolutely need to know. So whether you run a business, prepare taxes, or you're just getting ready to file, chances are these changes are going to affect you. So are you ready? Because these updates could change everything, from how you file to the credits you can actually claim. Let's dive in and get you prepared. So here's our game plan. We're going to start with the biggest rule change of all. Then we'll see what that means for businesses and for individuals. After that, we'll get into some really practical filing tips straight from the FTB, and we'll wrap it all up with a simple checklist of your next moves. All right, let's kick things off with the big one. See, the main reason for all these updates is that California has officially moved its conformity date with the federal tax code to January 1st, 2025. Now, what that really means is California is hitting the refresh button to align its laws with the federal rules as of that date. And that one change kicks off a whole domino effect of updates we need to talk about. Okay, so what does this mean for businesses? This is where we're seeing some of the most dramatic shifts. So if you're a business owner, you're going to want to lean in for this part. The first piece of legislation you need to know about is Senate Bill 711. This bill is the engine behind two massive changes that impact how businesses file their taxes and the credits they can claim. So what's the bottom line for you? Well, the e-filing mandate just got a whole lot wider. It used to be that you only had to e-file if you used certain tax software. Not anymore. Now the rule is super simple. If your business files 10 or more returns of any kind, we're talking income, payroll, information returns, you name it, you now have to e-file. This is a huge shift that's going to pull a lot more small businesses into the mandatory e-filing world. But Senate Bill 71 didn't stop there. Nope. It also brought a major shakeup to one of the most popular business credits out there, the California Research Credit. Now, what's really important to see here is the action that's required. The old credit, the IAC, is officially gone. California has replaced it with the Federal Alternative Simplified Credit, or ASC. But here is the critical part. If you are using that old credit, your election does not automatically carry over. You have to make a brand new election on your 2025 return to use either the new ASC or the regular credit. Don't miss this step. And here's the magic number to remember for this new credit. The new Alternative Simplified Credit rate is generally going to be set right at 3%. It's a simple, powerful number to keep in mind as you start rethinking your whole research credit strategy for this coming year. Okay, now for some really good news, especially if you're running an S-Corp or partnership. Senate Bill 132 has extended the very popular pass-through entity, or PTE, elective tax. It's now good until January 1st, 2031, which is a huge deal for long-term planning. This extension also comes with some new rules of the road. There's actually a bit more flexibility now. You can still make the PTE election even if you miss that June 15th prepayment. But, and this is a big but, there is a catch. Missing that payment means you're going to face a penalty that reduces your tax credit. And just remember, once you make that election on a timely return, it's locked in. No takebacks for that year. And Senate Bill 132 wasn't done yet. It also rolled out another major change, but this one is specifically for banks and other financial institutions. It completely changes how they calculate their income here in California. The whole change really boils down to this one concept, single sales factor apportionment. So, put simply, it just means a business's income is now assigned to California-based only on its sales inside the state. The old way of mixing in property and payroll is out. And that's the new rule, plain and simple. Starting with the 2025 tax year, financial institutions have to use this single sales factor formula. That old multi-factor formula, it's no longer an option for them. This is a fundamental shift for the entire financial sector here in California. All right, we've talked a lot about businesses. Now let's switch gears and focus on some really important relief and simplification measures that are coming for individual taxpayers. This is a huge deal for anyone who's been affected by recent wildfires. New legislation now allows taxpayers who receive settlement payments related to wildfires to exclude that money from their California income. This is just major relief. Now, this timeline is absolutely crucial. The relief goes all the way back to January 1st, 2021. That means you might be able to go back and amend previous tax returns. But please pay close attention to that date in the middle. For the 2021 tax year, you only have until April 15th, 2026 to file a claim and get a refund. Don't let that deadline sneak up on you. Next up, we've got a really welcome change that's going to make filing a whole lot easier for a specific group of taxpayers. Thanks to Assembly Bill 1518, the option for non-resident aliens to file a group tax return in California is now permanent. And this makes things simpler in 3 key ways. First, no estimated tax payments are needed for the 2025 tax year. Second, starting in 2026, that penalty for not paying estimated tax is gone for good if you're in a group return. And finally, you don't need a Social Security number or an ITIN to be included, which removes a huge administrative headache. Okay, let's get into the nitty-gritty. How can you make this tax season go just a little bit smoother? Well, getting authorizations right is key, and the FTB has some direct tips to help you avoid some very common delays. The FTB has laid out 4 key steps to avoid having a power of attorney form rejected, which, believe me, is a major cause of delays. The big takeaways here are: fill out everything, attach all your supporting documents, make sure what you type into My FTB is an exact match to the form, and this one's so important, tell your clients to keep an eye on their mail for a verification letter. Getting this right the first time can literally save you weeks of hassle. I know that was a lot of information. So, to wrap things up, let's boil it all down into a simple, actionable checklist. So, what are your next steps? If you're a business owner, you need to check if you now fall under that new e-filing rule and start planning your new research credit strategy. If you're a wildfire survivor, look into whether you can amend returns going all the way back to 2021. For financial firms, it's time to get ready for that new sales factor formula. And for everyone, the most important step of all is to talk about these updates with your tax professional to see exactly how they affect you. And all of this leaves us with one final thought. Tax laws are always changing. These are just the latest updates from California. So the real question is, what's your plan to stay on top of the changes that are definitely going to impact your financial future? Thanks for joining us for this explainer.